Imagine a country watching its currency collapse and then another superpower basically says, "Don't worry, we have got your back." That's essentially what happened with the Japanese yen in late 2026. Uh, the yen crashed towards 164 yen per dollar, a level not seen in roughly 40 years. Japan stepped into the market and reportedly spent around 8.45 trillion yen, about almost $53 billion to buy in and sell dollars. And here's where this gets crazy. The US joined in. This was an extremely rare coordinated intervention between Washington and Tokyo. And the US didn't simply dump dollars to buy in. Reports say it used euros from its foreign exchange reserves to purchase in. And why would America care about the Japanese currency? Here's the hidden connection. Japan is one of the world's biggest holders of US government debt, and if Japan needs dollars to defend the yen, it could potentially sell some of its enormous treasury holdings. That sounds harmless until you realize what happens when a giant holder starts dumping bonds. Bond prices can fall, yields can rise, and higher US Treasury yields can mean higher borrowing costs across the American economy. Mortgages, corporate debt, government financing, everything gets more expensive. And this wasn't simply America saves Japan, it's more like Japan needs to stabilize its currency, and America has an interest in making sure Japan doesn't still re-stabilize the world's biggest bond market. And there's another twist. Yen's weakness is partially connected to the huge interest rate gap between Japan and the US, which has encouraged investors to borrow cheaply in yen and invest in higher yielding assets elsewhere. There's a famous yen carry trade, and when that trade starts violently unwinding, global markets can feel it. The US and Japan managed to push the yen higher. And here's the uncomfortable question: can government actually defeat the currency market? Because after this intervention, the yen started weakening again, and that tells you something important. You can fight the market with billions, but you can't permanently defeat economics with intervention alone. And so, was this a bailout? Technically, no, but it may have been something even more interesting. Two economic superpowers protecting each other's financial interest, and that is the part of nobody should ignore.